Hello everyone and welcome back. Alright, so today we're going to be looking at efficient price action, right? Efficient price action. EP and IPA, efficient and inefficient price action, right? So it's not like the holy grail, I must say. It's just like some certain criteria to know that, to kind of like further validate your trades to get to efficient. I think you guys are going to be like the first persons I'm teaching this. So yeah, so what's efficient price action and what is inefficient price action? So we know that the market actually creates highs and lows in its movements, right? Price always seeks to do what? Okay, there are two things you should note. Price always seeks to trade from an efficient area, and then price seeks to rebalance an inefficient area. So price does what? Price always seeks to trade from an efficient area, and price seeks to what? Rebalance an inefficient area. So what is that? What is an efficient area? So now this is an efficient price action. Price makes a high, makes a low, and then price goes up like this. Now this price action is not yet efficient yet until price crosses below the demand zone, right? So until price crosses below the demand zone, right? Until price comes inside this range, that's this range now. Until price comes inside this range. So until price comes inside this range and go up again, we can then say that okay, price is efficient. So this means if we are going to like consider taking a trade in the future, we can take a trade comfortably from anywhere here because the price action in that area is what? Efficient. Because the price action in that area is efficient. So listen again, it's not really a difficult thing at all. It's not really a difficult thing, right? It's just for you to know efficient price action. So I'll clear this. So I said price actually creates a high, creates a low, and then this. Now this price action is not efficient yet, right? It's not efficient yet, so you cannot tell whether price wants to react from here or whether price wants to go below to get, because price will only trade from efficient zones. So I said it is only efficient when price have come below like this line, that's this high. If price comes into it and trades above it again, you get. So now what price has done here is that price is what? Efficient in this area. This means in the future we can comfortably take trades from here knowing that this area is efficient, right? And price would not be looking for anything down here again to rebalance, right? So this is why price actually goes beyond your area of value sometimes, because price, that area you're actually picking is not an efficient area. So in the future price will come back here, drop, and boom, go. Do you get? So that's for efficient price action. So this is an inefficient price action, right? Can you see this? This is an inefficient price action. This is an inefficient price action. Why do I say so? Do you notice how price is not entering back again? It's not entering back the demand zone again and just creating a new impulse. This is an inefficient price action, right? So this is an inefficient price action. This is how an efficient price action looks. So that is that. Anyways, like I said, price would always want to come and rebalance efficient price action. Price always wants to come and rebalance inefficient price action. That's IP, inefficiency, and avoids expansions and all that. But price will trade from efficient price action. So if you have something like this, where price is inefficient here, then price goes up like this, and then it's inefficient. But price does something like this, and then price is efficient in this place. We can still take our trades from here, right? Why do I say so? Our price is inefficient here, right? But it doesn't change anything. Now price became efficient in this particular one, right? We can still take our trades from where the efficient zone, ignoring what has happened below, right? Probably in the future price will come back to rebalance it, but we can still take our trades here that price turned efficient again, not regarding what happened below. Do you get what I said? So as simple as that. That is efficient and inefficient price action. So there is not so much to know about it. We'll talk about EP type 2 some other time. But anyways, yeah, this is the basics you should actually need, right? This is the basics you should actually need. Now I go again. This is an efficient price action. Price would have to come down below this particular, like price has to come to the this thing now. You get, it has to come to the demand zone. This entire place, when we land demand zone, this is the demand zone. So price has to test the demand zone and then go up again. You get, price has to test the demand zone and go up again. What price has done is what's very efficient, and which means in the future we can actually see price trade comfortably from anywhere here and continue. But if price does something like this is an inefficient price action, and price will seek towards rebalance it. Price may actually do something like this, something like this. We seek to rebalance it, and then boom, for the whole thing structures again. But that is by the way. So you trade from only efficient price action, right? You trade from what's only efficient price action. All right. So this is an example. This is an example. So the price action here is efficient, right? Price action here is efficient, and that is why price came and traded from here, traded from the FVGD. Price action there is efficient, and price traded from the FVGD, right? The same thing happens. Price trading from that FVG now make this price action what's efficient, because price did what? Because price is doing what? Come up and entered back again into the demand zone and then came up again. Now this particular zone is efficient, right? And it means that price, or it tells us that price will come back here and trade comfortably without having to bother about anything at all. You get? So yeah, so that this particular place now becomes efficient again because price has what entered the demand zone and come out again, using the most easiest of terms. And then now price has reacted again because it's an efficient area. Price has reacted to the other block, right? Now this particular zone again is an efficient zone. This particular zone is an efficient zone. It's an efficient zone, but price did not go above this high. So price not going above this high signals what, guys? It signals what? Trend exhaustion. When price is in an uptrend, if I've not said it before, hear it now. When price is in an uptrend and price has not what? Price just fails to make the next high, right? You can see that price is becoming exhaustive. That price is weakening, and we can see a very, very small shift in price before maybe a continuation. And that's what happened here. Because price failed to make this immediate high now failed to create a new high. We can see that there was a bit of exhaustion. Price did continue in a downtrend for a while before changing its trend again and continued upwards. So that's also something to note. That's also something to note. And where the price actually reacts from? Price actually reacted from here. Maybe there was another block here that we did not see. Price reacted from there and went up. So anyways, yeah, that is it for efficient price action, guys. You just need to understand where price is efficient and where price is not. That's all. It's not really any hanky-panky. Just need to understand where price is efficient and where price is not. So look at this particular place again, especially in trends. You're going to spot them where trend is prominent. Price is efficient here because broke out, came again inside the demand zone and went out. So price will trade shit. Okay, let's start from here. Price is efficient here because what happened? Price broke this out, came back into the demand zone and went up again, made this whole place efficient. So meaning that price can actually trade from another block here comfortably without having to bother about anything. Now price is also efficient here. Price is also efficient here. So the same thing goes. Price can actually trade from another block there. So Price is also efficient here, right? Came up, entered back into demands, and went up again. So we can see price actually trade from this other block here, right? Before price later came down again to seek whatever it came to seek. It came to take out liquidity, this trend line liquidity. So that is just it, guys. The efficiency of price action basically just tells you that, okay, this is what you should be expecting of price because it did this, it did that. Do you feel me? So you can go to your chart and check where price was efficient, and you see how beautiful price reacted after the efficiency was created. So charming. All right, with that, we've come to the end of this class. Okay, let me show you inefficient price action first before we come to the end of the class. Because efficient price action is everywhere. There's a place on GU that's very mad inefficient price action. And inefficient price action is just like your breaker blocks, then the expansion type entries. Then that's where you see them. GU is majorly always efficient. Because here, somewhere here, price was very inefficient here, and you can see what price just kept doing. Inefficient. Okay, I think this one is efficient too because price just, but that's a week anyways. That's a week. Okay, it was still efficient here, sure, but price was acting up. This particular one was efficient. Alright, okay, this one is an efficient price action. I'm looking for a total inefficient price action. A total one. Maybe to be an assignment from the sketch, you guys actually understood what I meant now by efficient and inefficient. I'll probably give it as an assignment. Okay, this one is inefficient. You can see price did not return back again. Price stopped here and went up. This one again too is inefficient. Can you guys see that? And what happened in the future? Price came back to rebalance it. So you avoid inefficient price action and trade from efficient price action. Simple and short. Let me look for a place where price was inefficient before and then resume the efficiency. I don't know if I'm actually audible enough or not. Anyways, GU price action is very clean. You can actually just go through it. And check for some of these things without. GU is like one pair. You can see a lot of examples from everything you've learned. Alright, we've come to the end of this class. Now next class we're looking at something a bit different. I'll see you guys in the next one.